In the not-so-distant future, you will look back on the decisions you make today and wonder if you chose wisely. The world is shifting. The landscape of wealth building is changing. Some will take the road most traveled, the safe, predictable path. But others, they'll look beyond the horizon, see the potential in the unknown, and make choices that will shape their future for generations. But as we stand on the precipice of 2026, one question remains at the forefront of many minds: is real estate still the best way to build lasting wealth? Real estate has long been a cornerstone of wealth building. For centuries, it's been the bedrock upon which fortunes have been built. It's stable, tangible. It provides income security and the possibility of long-term growth. But with the rise of new technologies, shifting economic landscapes, and an ever-changing market, we must ask ourselves, is it still the golden ticket? It's easy to get lost in the noise, to look at the headlines, the latest trends, and the social media posts about get-rich-quick schemes. There are those who will tell you that real estate is dead. They'll say the market is too saturated, the risks are too high, and that there's no room left for the average investor. But as real wealth, the kind of wealth that lasts, is never about chasing trends. It's about understanding what lasts. The value of real estate as an asset is simple as it's rooted in the fundamental needs of life. People need a place to live, businesses need a place to operate, and communities need a foundation in which to grow. And as long as those fundamental needs exist, so too will real estate's power as a wealth-building tool. But let's not sugarcoat it. Real estate investment is not without its challenges. The market fluctuates. It can be a roller coaster ride, a blend of euphoria and fear, success and failure. I've seen it. And I've learned the hard way that real estate is not a get-rich-quick scheme. It's not about buying a property today and selling it for a windfall tomorrow. No, real estate is about time. It's about patience, perseverance, and vision. You won't see results overnight, but if you stay the course, the rewards will come. I remember my early days of investing. There was a time when I bought my first property with all the enthusiasm of a novice, fueled by dreams of quick profits. It didn't take long before reality set in. The market wasn't as forgiving as I thought. There were unexpected costs, vacancies, and market downturns that tested my resolve. But I stayed. I made the tough decisions. I adapted to the changes. And over time, the property appreciated. It started to generate steady income, and suddenly, I could see the power of real estate, but only after time had passed. It wasn't easy, but it was worth it. And that lesson, that slow and steady approach, has stayed with me through every investment since. What makes real estate unique, even in 2026, is its ability to generate income while providing long-term growth. Unlike stocks or bonds, which can be highly volatile and unpredictable, real estate offers something that feels stable. The income it provides, whether through rents or capital appreciation, is grounded in something real, something tangible: a building, a home, a commercial space. These are assets that can be improved, that can be adapted to new needs, and that can continue to provide value even when the economy is uncertain. Real estate has a staying power that no other asset class can replicate. But, of course, nothing in this world is truly risk-free. Real estate comes with its own set of challenges. The cost of entry can be high. Financing can be complicated. Managing properties can be time-consuming and frustrating. But isn't that the nature of any worthwhile pursuit? If wealth building were easy, everyone would do it. If creating lasting value were effortless, everyone would be wealthy. The truth is, the road to wealth requires effort. It requires consistency, and perhaps most importantly, it requires vision, the ability to look beyond the surface, to see the potential in properties, in markets, and in people. The ability to recognize opportunities when others see only obstacles. Real estate investment in 2026 might look a little different than it did a decade ago. The tools we have today, data analytics, virtual tours, crowdfunding, and even blockchain, allow us to access markets and properties in ways that were once unimaginable. But the fundamental principle remains the same. A real estate is about providing something of lasting values, and in a world that is constantly changing, that's something worth holding on to. As we move forward, we must ask ourselves, what kind of wealth do we want to build? Is it the quick, fleeting kind that comes from jumping on the next trend? Or is it the kind that lasts, the kind that is built on patience, strategy, and a deep understanding of the forces at work? Real estate has stood the test of time for a reason. It's not always easy, but it has always delivered. The question is no longer whether real estate is the best way to build wealth. The real question is, are you willing to commit to the long journey? Let's take a moment to pause and reflect. It's easy to get swept up in the excitement of new opportunities, especially when the world is moving so fast. It seems like every day there's a new technology, a new investment vehicle, a new way to make money. And I get it. Change is exciting. It feels like progress. And we all want to be part of something big, something that promises to transform the future. But in the rush to embrace the new, we often forget about the ER's timeless principles that have stood the test of time. In a world where constant gratification is the norm, it's easy to lose sight of the importance of those delayed rewards. When you look at real estate investment, you realize that it's not about quick returns. It's about building something of lasting values, not just for yourself, but for your community, for your family, and for future generations. I've often said that wealth building isn't just about accumulating assets. It's about understanding the nature of those assets, about having the foresight to choose the right ones, and having the patience to allow them to grow. This mindset is what sets real estate apart from other investment opportunities. It's not a flashy market. It doesn't promise overnight riches. Real estate is about us building for the long term. The income may come slowly, and the appreciation may take time. But when it happens, it's sustainable. It's grounded in something real, something that can weather any storm. Look around you. Even in the midst of market fluctuations and economic uncertainties, real estate remains a constant. Think about the people who invested in land when it was cheap, when the future was uncertain, and who had the foresight to hold on to those properties. They didn't panic when the market dipped. They didn't rush to sell when others were fearful. They understood something fundamental, as in wealth takes time, and yet there's a tendency to overlook this. We live in an age where people want everything now. The idea of buying a property, holding it for years, and waiting for it to appreciate, well, it seems almost counterintuitive. It feels like a slow road compared to the fast-paced world of digital currencies, tech stocks, and cryptocurrency. But this is the critical point. Real wealth is built in the long run. The quick wins are just that quick. But the true foundation of wealth lies in patience, in the consistency of sound decision-making over a long period of time, and in the resilience to hold on to something of value through thick and thin. Now, I want to speak directly to those who may be doubting whether real estate is still a viable investment in 2026. I understand the concerns. The market can seem intimidating. Prices are rising, rents are fluctuating, and technology is changing the game. But the West principles that govern real estate investment haven't changed. What has changed is the easy access to information. We now have more tools than ever to evaluate properties, assess market trends, and make informed decisions. In the past, investing in real estate may have required a great deal of personal effort, a deep understanding of the local market, and perhaps even some luck. But today, technology has democratized access to real estate investing. Platforms like real estate crowdfunding, virtual tours, and blockchain-based transactions have made it easier for investors to enter the market. The barriers to entry are lower, but the need for ours wisdom and a long-term perspective remains unchanged. Real estate investment in 2026 isn't just about buying property and waiting for the market to rise. It's about understanding the area's local dynamics, the evolving needs of the community, the development of new infrastructure, the demographic shifts, and the broader economic forces at play. It's about choosing the right property in the right location, not just for immediate profit, but for sustainable growth over time. Think about it like this: real estate is like planting a tree. You don't plant a tree with the expectation that it will bear fruit immediately. You plant it, nurture it, and give it time to grow. But when it does bear fruit, the reward is as abundant and lasting. You'll enjoy the fruits of your labor for years to come, and so will those who come after you. So let's clear up a misconception. When people say that real estate is dead, or there's no room for growth in the market anymore, what they're really saying is that they're not looking at the market with the right perspective. They're looking for instant returns, for a shortcut, for something that will get them ahead quickly. But real wealth doesn't work that way. The market is still full of opportunities, but they require patience. They require patient vision. It's about recognizing the value in an area before the rest of the world does. It's about understanding that while the market may fluctuate, ours people will always need a place to live. Businesses will always need a place to operate, and the demand for real estate will only grow as the world continues to urbanize and develop. So, the real question isn't whether real estate is still the best way to build wealth in 2026. The real question is whether you're willing to take a long-term view, to invest with purpose, and to let your wealth grow slowly but steadily. Real estate is a tool. It's not a get-rich-quick scheme. It's about understanding the intrinsic value of the asset, being patient enough to see it through, and having the foresight to hold on when others might panic. In an ever-changing world, this is what true wealth building looks like. As we continue down this path, it's important to talk about ours risky. Too often, when people discuss real estate investment, they focus solely on the rewards. The potential for passive income, the chance to own something that appreciates over time, those are the things that grab attention. But I've learned that it's just as important to understand the risks involved, because every investment carries risk, and the more you understand the risks, the more prepared you'll be to make the right decisions when those risks come knocking at your door. Real estate, like any investment, can bring its share of setbacks. I've seen people get burned by market downturns, by property mismanagement, by unforeseen expenses. It's easy to get excited when you're riding the highs of a booming market, but it's in the lows that you learn what you're really made of. And in the world of real estate, those lows can sometimes feel like deep valleys. But it's how you respond to those challenges that will determine whether you succeed or fail. There's a lesson I learned early on in my career that I want to share with you. I once bought a property in an area that seemed like it had so much potential. The prices were low, the neighborhood was up and coming, and everything about it seemed right. But I overlooked something important. The area had a history of volatility. The market had fluctuated wildly in the past, and while things were looking up at the moment, no one knew how long it would last. It wasn't long before I found myself dealing with vacancies, rising property taxes, and unexpected repairs. The excitement I felt in the beginning faded, replaced by the weight of uncertainty. And here's the thing, I didn't panic. I didn't sell the property at a loss and run for cover. I took a step back, reassessed, and made adjustments. I raised rent strategically, worked to improve the property, and over time the neighborhood began to gentrify. The value increased, and eventually it became a steady source of income. The point is this: a risk isn't something to be feared. It's something to be managed. In real estate, managing risk requires discipline, patience, and foresight. When others panic, you remain calm. When the market dips, you evaluate your options, adapt, and wait for the opportunity to arise. Because in the end, real estate rewards those who understand that downturns are just part of the cycle. The true investor doesn't try to avoid the risk. They understand it, embrace it, and find ways to work with it. This is where many people go wrong. They jump into real estate thinking it's a surefire way to make money, without understanding the inherent risks. And when the inevitable challenges come, whether it's a market downturn, maintenance issues, or tenant problems, they're caught off guard. They sell too quickly. They lose faith in the process. And ultimately, they miss out on the long-term benefits of staying the course. The key to real estate investment, especially in 2026, is just to diversify your strategy and understand the cycles. The market will go up and the market will go down. But if you have a diversified portfolio, a mix of residential, commercial, and perhaps even some alternative properties like vacation rentals or multifamily units, you can weather those fluctuations more effectively. You need to be prepared to make adjustments, to pivot when necessary, and to stay focused on the long-term goal. Real estate is a long-term game. It's about as building resilience as understanding risk and managing it wisely. It's about having the vision to see the potential in a property and the patience to see it through, even when times get tough. You won't always see the returns immediately, but if you make wise choices, they'll come. Over time, the market will reward you for sticking with it. You just have to trust the process. Now, let's talk about another important aspect of real estate investing that often gets overlooked is the power of leverage. In real estate, leverage means using other people's money typically in the form of a mortgage to acquire property. This allows you to control a larger asset with a smaller initial investment. It's one of the greatest advantages of real estate investing, and it's something that can accelerate your wealth building process. But with great power comes great responsibility. Leverage can amplify your returns, but it can also amplify your losses if you're not careful. It's a double-edged sword. When you borrow money to finance a property, you're committing to pay that loan back, regardless of how the market performs. That's why it's crucial to make sure the property generates enough income to cover the expenses. The last thing you want is to be over-leveraged with a property that isn't pulling in enough revenue to pay the mortgage taxes and maintenance costs. Again, this is where many investors go wrong. They get too eager, take on too much debt, and end up in a financial bind when things don't go as planned. But if you approach leverage with caution, if you buy properties that generate consistent cash flow, and you make sure your mortgage payments are manageable, you'll unlock the true potential of real estate. Leverage can help you scale your investments, acquire more properties, and generate greater wealth over time, but only if you use it wisely. So where does this leave us as we look toward 2026? Real estate is not without its challenges. The market will always have its ups and downs. But the key to success is understanding the balance between risk and reward, leverage and discipline, vision and patience. The principles of real estate investing haven't changed. They've only become more relevant. The world may be evolving, but the foundational truths of wealth building remain constant. Apart fortes, at this point, it's clear that real estate investment in 2026 requires not only patience, but also a mindset shift. In a world obsessed with instant results, real estate stands as a pillar of timeless wisdom as wealth is created through consistency, not speed. It's easy to fall into the trap of wanting immediate gratification, that feeling of instant success. You see it everywhere: advertisements, social media, influencers, and the constant noise of people promising to make you rich overnight. But that's not real wealth. Real wealth takes time, understanding, and most of all, as resilience does. One of the key factors that separate those who succeed in real estate from those who falter is the ability to stick to a strategy, even when the going gets tough. The market can throw curveballs, the economy can shift unexpectedly, and there will always be external factors you can't control, but you can control how you respond. I've seen too many investors get impatient or emotional when the market dips, and they make hasty decisions, often selling properties too early or taking on too much risk just to keep up with the latest trends. I learned early on that the secret to wealth isn't about being the first to act. It's about being the last one standing. You must be able to stay calm in the face of uncertainty. Real estate is often a test of your fortitude. It's about weathering the storms, being willing to wait for the right moment, and seeing your investment grow steadily over time. Think about this. The wealthiest individuals in the world didn't make their fortunes by chasing trends. They made their money by understanding the core principles of wealth building: value, patience, and persistence. They didn't sell their real estate investments when the market dropped. They doubled down, took advantage of low prices, and patiently waited for the inevitable recovery. They invested in things that would endure, things that were always going to provide value, no matter what the headlines said. In today's world, as real estate is still one of the most reliable wealth-building tools, because at its core, it's about providing shelter. People will always need a place to live. Businesses will always need space to operate. And as the world grows, the demand for real estate will only increase. Now, that's the enduring power of real estate. It's not a trend. It's a fundamental need. So as we look ahead, the question remains, are you ready to embrace the slow, steady journey? Are you willing to stay patient, disciplined, and focused on the long term? Are you ready to adopt the mindset of those who have truly built wealth, not by chasing the next big thing, but by making decisions grounded in wisdom and foresight? This is the mindset of true investor, and it's the one that will guide you to success in 2026 and beyond. Continue when you're ready, Sergey. Part 50R. Let's talk about diversification. When we think of real estate, we often think of single-family homes or apartments, but there are many more ways to diversify your real estate investments. Commercial properties, multi-family units, vacation rentals, and even Oz industrial real estate are all viable options that can offer different types of returns. But the underlying principle remains the same. You want to protect yourself from market volatility by spreading your investments across multiple types of assets. Diversification isn't just about owning a few properties. It's about owning the right mix of assets that can provide income in good times and bad. This is especially important as we look at the future of real estate in 2026. The economy is changing, and with it, the needs of the market. By diversifying, you give yourself the flexibility to adapt to whatever comes next. Take multifamily properties, for example. In many parts of the world, demand for rental properties is at an all-time high. Young professionals, students, and even families are renting longer, choosing to invest in experiences rather than homeownership. The shift toward renting is growing. In this case, as multifamily homes and apartment complexes can generate a steady stream of income, even during times of economic uncertainty. Similarly, vacation rentals have become an increasingly popular investment option. Platforms like Airbnb have made it easier than ever for property owners to rent out their homes or apartments on a short-term basis. As Airbnb properties, when managed well, can bring in higher returns than traditional rental properties. But they also come with risks. Demand can fluctuate, and there are the management headaches of dealing with guests. That's where diversification comes in. If one investment type faces a downturn, the others can help buffer your portfolio. Commercial real estate is another avenue that may look different in 2026. The pandemic reshaped how people work, and more businesses have moved towards remote or hybrid models. As a result, the demand for office spaces has been challenged, but there are still growing sectors in commercial real estate. Logistics hubs, warehouses, and industrial properties are in high demand as e-commerce continues to rise. The beauty of commercial real estate is that it allows you to tap into entirely new markets and industries. Diversification also helps you reduce risk. If you only focus on one type of property or market, you're more vulnerable when things don't go as expected. But when you have a diverse range of investments, you can balance your exposure and reduce the risk of significant losses. Of course, diversification requires more than just owning a few properties in different sectors. You need to be strategic about where and how you invest. It's not just about quantity, it's about quality. Make sure you are researching the markets thoroughly, understanding the demand and supply dynamics, and choosing properties that align with your long-term goals. The beauty of real estate, especially in 2026, is that the tools at our disposal allow for greater precision and foresight. You can use technology to analyze trends, track property values, and evaluate emerging markets. The future of real estate investment is not just about buying properties blindly. It's about making informed decisions based on data, research, and a deeper understanding of market trends. Real estate will always have a place in your portfolio if you approach it with the right mindset and strategy. Diversification gives you the power to weather storms, adapt to change, and capitalize on new opportunities. It's an insurance policy for your wealth and a shield against uncertainty. We've covered a lot of ground so far. But now I want to leave you with a final important thought. If real estate investment is about building a legacy, it's not just about you. It's about your family, your community, and your future generations. This is where real estate stands apart from other investments. Stocks and bonds are intangible. You don't see them, you don't touch them, and you don't have the same connection to them. But real estate is tangible. It's a part of the physical world. You can drive by it, you can touch it, and in many cases, you can improve it. You can leave something behind for your children, for your grandchildren, something that will provide for them long after you're gone. Real estate investment isn't just about making money. It's about leaving a lasting legacy. It's about building something that will endure, that will provide shelter, security, and opportunity for those who come after you. When you invest in real estate, you're not just creating wealth for yourself, you're creating wealth for generations to come. That is the true power of real estate. It's not just a way to get rich. It's a way to make a difference. It's a way to leave behind a legacy of abundance, one that impacts not only your own life, but the lives of countless others. Wealth is not just about accumulation. It's about contribution, and in the world of real estate, your investment can do both. So as you reflect on the journey ahead, ask yourself, What kind of legacy do you want to leave? Are you ready to embrace the long-term journey of real estate investment? Are you ready to make decisions that will shape your financial future and the future of those who follow in your footsteps? The road ahead may be long, but it's worth it. The key to real estate is simple: build wisely, build for the long term, and build with a purpose. Here's the wealth you create will not only enrich your life, but will continue to provide for generations to come. And that, my friend, is true wealth. As we reach the end of this journey, let's take a moment to reflect on everything we've discussed. Real estate in 2026 is not just about market trends, interest rates, or the latest digital tools. It's about purposes as vision and FIA's legacy. It's about understanding the fundamental truth: yes, wealth is built slowly with care, patience, and resilience. There are no shortcuts to real wealth. There is no secret formula that guarantees instant success. But there are principles that have stood the test of time, principles that have made real estate the most reliable and powerful wealth building tool in history. You've heard the stories of setbacks, of risk, of patience, and perseverance. But through it all, there's one common thread. Real estate is a tool for creating lasting, meaningful wealth. The wealth that isn't just for you, it's for your children, your grandchildren, and the community that will benefit from the opportunities you create. It's about providing something of real value that will endure, no matter what the world throws at you. As we face 2026, the opportunities in real estate are not only alive and well, they are waiting for those with the right mindset to seize them. Yes, the landscape has changed. Yes, there are new challenges, new tools, and new risks. But the underlying truth remains the same. People will always need shelter, and those who invest wisely in real estate will continue to reap the rewards. The market will go up and down. There will be times of uncertainty, times of doubt, and times when the easy path will seem tempting. But the path that leads to true wealth is the one where you build carefully, with patience and wisdom. It's the path where you understand the value of time, the power of resilience, and the importance of vision. It's the path where you don't just invest in properties. You invest in your future, your legacy, and the future of those you care about. So, ask yourself, what kind of wealth do you want to build? Do you want to chase fleeting trends? Or do you want to build something that will last? Real estate offers you the chance to create lasting, generational wealth, but it requires Oz commitment, Oz discipline, and Oz a long-term view. If you can embrace that mindset, if you can stay the course through the ups and downs, the rewards will come. And remember, true wealth is not just measured in dollars and cents. It's measured in the difference you make, the legacy you leave behind, and the impact you have on others. Real estate can give you the platform to build a legacy that lasts beyond your lifetime. As you step forward into 2026, remember that real estate investment is a marathon, not a sprint. It requires patience, persistence, and a long-term vision. But with those principles, you will build something far more valuable than mere wealth. You will build a legacy of abundance, purpose, and lasting success. Now go forth with that vision. Build wisely, build with purpose, and build with patience. The future is yours to create. Let real estate be the cornerstone of your wealth, a wealth that endures, grows, and impacts generations to come.